Welcome back. We're focusing on the banking sector now. In the last couple of weeks, we've seen a heavy haircut across most of the banks. Very recently, some banks announced that they were rationalizing to ensure optimal production in the banks. In what areas? Well, as much as possible, they've been hit by strong macroeconomic headwinds, both domestic and international, of course, as well as non-performing loans that have grown by the numbers in the last couple of months as well. But is this the banks, what is happening in the banks, is this a reflection of what is happening in the economy? Most agree that it is. Let's talk to Ayo Akiumu. He's the head of research at FSDH Merchant Bank. Good morning to you. Thank you for coming on the program.
Thank you for having me.
Let's reappraise the state of the banks. A lot of conversation has been that the banks are pretty challenged right now because of the situation happening domestically and internationally as well. But for you, do you think that something could have been done to kind of shield the banks from the situation that they are in right now?
No, I don't think there is anything that can be done to shield the bank from the current situation. If you see banking as a middleman between the surplus sector, and further they mobilize surplus deficit from the depositors, and they lend to the deficit sectors, the business and the household who need money to do one or two things to expand their businesses. So as we speak today, the surplus sectors, that's the depositors, are challenged by rising inflation in the country. Disposable income have actually gone down. High unemployment rate, people are losing their jobs. Wealth is declining because of the current macroeconomic development in the country. And so we have that challenge from that area. So their customer from that area has problem. It's going to be passed on to the bank as increased cost. Even the other deficit sectors, the people that they lend money to make additional interest, to make money from them. There are a lot of weak assets, like you mentioned earlier, in order not to have incidents of high non-performing loans. So they are playing a bit, they are being cautious in the industry now. So if you have such developments happening within the economy, it's going to affect the bank. And banks will have to develop strategies to ensure that they play safe. That's why a number of them are actually played in treasury bill investment despite the very low rates. But I think as we get clearer direction from the monetary authorities and the fiscal authorities, situations may improve, which will also improve the businesses for them.
Mr. Akiumi, this might seem like a very lame question, but please comment on it if you can. Do the banks understand what it means to be a bank? Do you think that the banks understand what it means to be a bank?
It's very simple. It's intermediation. Okay? You take money from the, like I mentioned earlier, deposit sector, the surplus sector, and you lend.
Okay, sorry to cut you there, because you see, if they understand what it means to be a bank, and based on the definition that you've given, okay, then this might not be the time to begin to rationalize, because you already rightly pointed out that there's a challenge, of course, of unemployment. And so you're rationalizing and you're putting people into that same sector that you're trying to, as much as possible, well, they don't really have so much to do with it, but you're putting so many people back into that particular sector.
Okay, so banking is a business.
It is a business. Right. And so you have to come up with innovative ways to make sure that the staff who you have, who you feel that they're replicating roles, because that's what they said. They said because of there were some certain roles that needed to be improved, looked at to improve efficiency. So if you have those kind of roles, why don't you really do core banking?
Now, I'm not in support of retrenchment. However, there are practical steps you need to take when you are challenged. In business, there are a lot of stakeholders. There are companies, there are individuals, there are shareholders who give them money to enable them return profit to them. And if you look at to the extent that you look at the numbers that the National Bureau of Statistics released in January, for first quarter, on the GDP, a contraction. The businesses that these banks are doing are contracting. And therefore, what they then need to do, a business that was generating maybe, say, for the sake of argument, 100 billion naira before, they cannot get more than 50 or 60 billion there from that now. And therefore, the number of people that will be required to do that will have to reduce. And so they have to cut costs to enable them remain in business. Because if they don't do that, there may be problem that may even be bigger than what we are talking about. But you see, we just hope that it's going to be a temporary situation. And when things improve, some of these people will still be called back to continue with their job.
Right now, we know that the Central Bank of Nigeria is trying to introduce a flexible forex policy. Most of the policies that have actually come out, a lot of analysts have actually said, had kind of stifled how flexible banks could be. So do you think that with the easing of policies, and maybe, let's not also forget the withdrawal, the introduction of the Treasury single account and all those monies that kept on, being withdrawn from the banks back to that particular account, do you think that if there's an easing, there might also be like an easing among the banks and allowing them to do business? Okay.
There are two things that you've mentioned now.
Yes.
The flexible exchange rate, which we had advocated for, and which for our side of concern, the Central Bank is coming at this point very late, right? Of course, about 6 months ago, if they had allowed the currency to float, maybe to 240, it would have been good by then. But now it has to go beyond that level. They need to do that, and I think they need to open, with their guideline, open the interbank market to allow trading activities that people can buy and sell. However, easing, that's not easing actually. Easing, if you mean easing monetary policy, will not address the problems we have at the moment. We have a very rising inflation rates. We have weak exchange rate. So easing policy, cutting rates, reducing CRR does not, address that problem. You need to tighten. You need to ensure that you have policies that will enable investors to have confidence in your system to save. Rising inflation is a disincentive for saving. So if investors have a situation where you have real positive yield on their investment, it will encourage saving. So, but flexible exchange rate, which the Central Bank has announced, will go a long way to ease issue. And that's one of the factors that have not been allowing the foreign investors to bring their funds into Nigeria. And even the local investors, who, business people here, who wants to actually import, they are not able to have access to forex to import. So if that is done, and they come up with clear guidelines on how the operations are going to be followed and they monitor it, I think it's going to help.
Do you think that budgetary spending can create more jobs in the banking sector?
I believe it's going to create more jobs. Like I mentioned earlier, a lot of construction works, a lot of businesses have closed down because of the fact that government has not been doing what they need to do. I mean, the last 1.5 years, it's been an election before the President Buhari came on board. After he came on board, it has been, delay in release of ministerial list, and after that, the problems we face through the budget approval process and all of those. But now, if they are now going to reinflate the economy, I mean, for about 6.06 trillion naira, which is the highest in the history of this country, and with the fact that they are going to allocate a lot of money on capital projects, I think it's going to create jobs and it's going to stimulate the economy to a larger extent. But then the impact will not be felt immediately. It may take some time, maybe some few months, before you begin to see the impact on the economy. But what we just need actually is a clear direction of where the government is going, and investors can take investment decisions that will create jobs.
What direction do you think the banks are going right now?
The banks, the way we are, it's stable. There are challenges. They are trying to manage it. They are a bit careful in lending, because look, the GDP number that was released first quarter this year, you see the contraction from the manufacturing sector, very high, huge.
Minus 7%.
Yeah, and that sector is quite big. And what you have, and of course, we know the problems. They don't have FX to import raw materials to produce. There are build-up of inventories. The things they produce in their warehouse, they cannot sell. Even the one they sell, there are build-up of receivables, okay, because of the weak spending purchase power in the country. Rising inflation rate has eroded, spending power from people. So people are not able to spend. But if government comes up with policy that we, reflate the economy, that we create jobs, that we create activities, banks will have more viable businesses to fund, to lend to, and when that is done, we are going to have, more jobs that will be created in the system and across the entire industry.
But for how soon do you think that will happen? Because as it is right now, there's no timeline, with regards when any of these policies will come in place. And so up until that time when the clarity does come, we'll continue to see more retrenchment from the banks. We'll see more staff laid off. And in the case of this particular bank, EcoBank, some of the staff who were contracts have now been made permanent staff. But for how long? Well,
we're only talking about banks now. That's the
Yes, they are the ones that actually drive the economy.
Yes, they provide finances to create, to finance operations, to finance productions and constructions and all of those. But again, in other sectors, what we are talking about is in all sectors. Even government, state governments are owing salaries. For me, even though I do not, it puts pressure on even people who are working. When you have your relatives that have lost their job and they have bills to pay, to cover, it puts pressure on some of us who are still working. But then the reality of the matter is that even it's better for them to allow them to go than keep them and owing them salaries, and they keep on coming to work without paying them salaries. And that's the situation we have in most of the state governments across the country today. All right. So if they leave, they can go and look for something to do, and after which, when things improve, they will come. But to say when exactly this will happen, nobody knows. It depends on what the policies the federal government, comes up with, and how quick they are in releasing the budgetary allocations to various MDAs and the project they want to fund. And again, the central bank coming up with, policies also that will be acceptable to the investing public, that will enable people to take decisions in the economy. Now, that's the only way we can, have a vibrant economy that will create jobs.
Thank you so much, Mr. Akimu, for joining me on the program and giving us your perspectives.
Thank you very much for having me.